All right, good morning and welcome back to the Sydney Tokyo overlap for 3rd 4th of March 2025, and it is around 7 p.m. Eastern now. Uh, should be having some daylight savings changes. I think I think on the 9th of March it is. So we'll look around accordingly, and let's get started off with the daily chart of Euro USD. Maybe before that we should be inclined to get started with gold. We've got trading interests in 6 instruments, so we'll first look into those six, starting with gold. Okay, now that's the daily chart flashing up on your screens. We have adjusted the wave counts since last week, where okay, let me just remove that gold 4-hour thing. Okay, so the primary count was minor wave 1, wave 2, wave 3. We were expecting an expanded flat wave 4 in the making. Remember, an A, B, and C, where wave 4 was projected to go much deeper towards 2500 mark, and then primary or uh, minor wave 5 would resume after 2500 dip. That was our high probable wave count just until last week. Looking at the rally that has taken place from or since 2537, uh, it's already unfolding an impulse. It looks like, right, where we've got wave 1, wave 2, potential wave 3, wave 4 in the making, and possibly wave 5 after that. So if that 5 wave rally is materializing, it cannot be an ABC, but it's actually unfolding the minor fifth wave. So we've readjusted, or we've adjusted wave 4 to be in place possibly around 2537, and also relabeled these wave structures as 1, 2, 3, potential wave 4 lower, and thereafter wave 5. Now within the fourth wave, we are the second wave was an expanded flat possibly, so the fourth wave would be a sharper decline, maybe a flat or a zigzag, and within the flat or a zigzag we've got the first leg lower last week, where we kind of went short and made money as well. That was the drop, selling around 2930s and taking it all the way towards all the way towards 28 50 60. We were not we already covered positions by the time it dropped to 2830. So possibly it looks like wave A is in place ideally, and wave B. Yesterday we were projecting a counter trend rally. I think on all the three sessions we were talking about a potential rally hitting across the 2900 zone, possibly 29.9. So we've hit the 50% mark. Ideally, if a corrective wave B is in the making, then they would stall around the 50% mark. Let me zoom in a bit. So if this is wave B, then it would already stall around the 50% mark, which it is doing right now, and a turnaround is very much possible anytime. We are just giving a bit of more room for prices to push over to the 61.8% or around the 2909, and then reverse towards the 2760 region. All right, so that's the price target we are now watching for. And yesterday we have issued a one short position in the portal around 28.75. We would be looking to issue another one, maybe not just now, but probably around the 2900 handle. Let me just go to an hourly chart. Even if it sell around this price, it won't be an issue. It's already the 50% mark, but we don't want to get stuck at one price, too many things. So possibly we'll wait for 2900 decline, for 2900 rally, sorry. And let me see if there is a diverging scenario already. I think we do have. That could also be the fourth wave in the making. And if it is wave 4 in the making, there will be one more high. So it's better to, we'll put a limit order around the 2900 zone to initiate another short in gold. Stop loss goes around the same price, 29 59.50 or 60. That's absolutely the same price almost. And then we carry through. Let me just redo the Fibonacci sequence. If we go by the Elliott sequence, then we need to feed back to a potential wave B, and if that is potential wave B, then the 61.8% is coming around 2817. Possibly if wave A tries to be equal to wave C, then it can drag much lower as well. So I think we should wait for wave B to complete and then try and project this Elliott extension. Before that, I think we are good with the simple Fibonacci extension of what we did earlier. Another thing which we could do in anticipation of a potential wave B complete is that draw a parallel channel, and remember, waves really follow that channel path. And if you look at the convergence coming in from here through this Fibonacci ratio, 2790 is somewhere hitting around the 7th of March. Alright, so we'll keep a close eye on the 7th of March, and let's see what happens after that, or how the price action is shaping through the 7th of March. Alright, so that's the status in gold. Price targeting around 2790 with partial shorts around 2875, remaining potential shorts to be taken around 2900 with the stop loss around 2960. Alright. So now let's begin with the Euro USD. I think we can start with the daily chart. The outlook stays firmly on the long side. There was the first impulse wave neatly placed 1, 2, 3, 4, and 5, followed by a corrective wave. Though complex, it took a couple of years for that ABC to materialize. I mean, that was the inflection point which took traders by trouble. I think we were also in trouble for at least a month or so, but then it all reversed very sharply and settled around the 61.8% mark, right at 1.0175, 79 actually on the 13th of January. And since then, it has been mostly Euro bulls into picture, except for the one day where the trade tariff wars were initiated on 3rd of Feb, I think, 3rd or 4th of Feb, when you saw the prices dropping very sharply, but that was actually wave 2. So looking at the wave structure right now, as we speak, it is minute wave 1 and 2 in place already. At 3rd February low was minute wave 2, and now we are actually moving in a third wave, which is at a 3 degrees. You see, the first degree is minute, the second degree is minute, and the third degree is subminute. So at least at 3 different degrees, the third wave is progressing. And if by any chance, if we are right in projecting, then we already saw price action moving almost 100 points yesterday. After projecting what we did around these times, London, Sydney, and Sydney Tokyo overlap, Euro has already raised through 100 points, and if it continues like that, it's not going to be that rocket science to project 750 targets within no time, and the next target is around 1100. Right. If you look at the RSI, please, RSI has raised itself back towards the 60 mark. That could be a little uncomfortable for bulls to carry this momentum uh, at the same intensity. Maybe there could be a low or a retracement in the making. Maybe I can take this path off and we can redo it. You never know, it drops off a bit and then rallies. That could be the potential wave count. Alright, we'll watch out for wave 3, 4 and 5 of sub-minute degree. Let's hope for a corrective decline. Now, trading point of view, if this corrective decline materializes, then might be having another potential entry at 430, so around 430 odd levels where you can re-enter, or you can take fresh positions, you can add your positions, because if you're absolutely not taken any, then I think it's better to put a limit order right away around the 430 mark, where you never know when prices will retrace and you don't get a chance to enter. Right, and if you are just having already positions active, maybe we might want to wait and see if you can catch the bus again at 430 or 400 levels. But even if you miss that, it's okay, you're already into the trade. But please have your stop loss even now at around the 200 mark for to remain for bulls to remain in control of this trade. All right. We don't want to get stopped out immaturely. That's the only reason. Once we are out of this range, see, the corrective waves are very typical. We know that. You never know if this is a triangle in the making. I mean, you can see the three wave structures here, brothers. Three down and then three up, then again three down. You never know. It's already a three up in the making where you have A, B, C. So maybe it's wave A, B, C, D, and possibly wave E. It's all possible, right? So be prepared for what is not being thought about, and you'll be fine. Maybe one more corrective decline or back towards 400 is absolutely possible. And once we are out of this boundary, and that boundary is precisely defined between 212 and 530. we need to be out of this boundary. Once prices break out of this boundary, then it is not a good idea to book profits anywhere before 750 or 1100. But till the time we are in the boundary, confined within this boundary, prices can really go a bit more sideways before the last leg. If we just look at the daily chart and if we try and see what is happening, I mean it won't be too complex scenario where we can imagine this as wave A, wave B, wave C, wave D, and possibly wave E of the triangle to complete that corrective wave 2 before the thrust wave actually appears, or not the thrust wave but the third wave. So it's either third wave at multiple degrees already started moving, or it's a triangle wave 2 in the Euro USD. All right. So, but overall the direction is bullish, and we stay bullish there. Dollar index now. Here the structure is slightly different. I would say rather I would rather propose a wave 2 of 3 in the making. But before that, the larger degree count, please. It is impulse lower followed by a corrective higher. So it's already the larger degree trend is already down, 5 down followed by 3 up, and what we are now seeing on the right hand side is also wave 1, wave 2, and 1 of 3 is complete. Possibly now the first wave of the third wave has completed as a diagonal. Possibly you can see wave 1, 2, 3, 4, and 5. So if a leading diagonal has completed, then we are in a corrective wave, and now that corrective wave, I mean leading diagonal means it is a 53535 structure, uh, which might have terminated right on the 26th of Feb around 106, and these two are the boundaries for the leading diagonal. Oh, that's the channel, but the leading diagonal will connect 1 3 and 2 5. So that whole boundary is a leading diagonal which is 1 of 3 actually, and the 2 of 3, have I taken the retracement of the leading diagonal, please? Yes, that is the retracement of the leading diagonal boundary, and if we go by any means, the 61.8% is coming around 108, right? So in that case, and I also see this as an impulse 5-wave rally followed by a corrective 3-wave decline, which actually calls for a slight change in the path. We can go a bit further around 108 and then decline. That remains quite possible. And if that is the structure, then I would actually suggest, if you are taking shots already and if you're holding more than one position, then you can take partial profits right now around 106.46 and wait for that could be a very surprising couple of 100 points rally uh, towards 108, if not 108.36, at least 108 107, sorry, 107.10, All right, so be careful in the sense that even if you are holding short positions and prices rally, I mean, there's nothing going to be wrong. But just in case, if you want to take short-term profits and give yourselves room to book later or add later, then it will be a good position. And if we go by this analogy in the dollar index, then I won't be surprised to see a euro drop very sharply back towards maybe 10350 handle. Let us have check again. I really won't be surprised to see 61.8%, which is 1.0334. All right, so it's a catch tricky situation here. If you're just holding one position, maybe you would want to hold that just in case not to be completely out of the trade. But if you are holding more than one or two, three positions, then it's always good to take some partial profits off the desk and then remain on the sidelines. Look out for another high, another low around 1.0334, and then initiate long positions again. Right. So I mean, at this point, can really stretch out a bit lower and then higher. That could be the projected path actually. All right. So we'll anyways come to know whatever is going to happen in the first week here. So let's hold on for now on the long side. But the trend does not change. That's more or less confirmed. Even if it's a triangle, then this point is a bit shallower. I'm just thinking a lot of the patterns those are possible. All right, GBP USD is the only one which has. I mean, bulls have held their ground so firmly. It looks like it's already 27 plus yesterday, right? 24, 1.27, 24. So it goes without saying that the strength in pound is a bit higher than what we are discussing. But tell you what, if you look at the wave count, let me just bring this up. Let me take this out for a while. All right, now if you look at the counts here, that could be the first wave complete within the third wave. You see that? And that's an impulse complete possibly. So let me just take a retracement of that wave because I think that retracement is not required. We need to just clear up the cluster a bit, and this rally I think is followed by an RSI diverging. There you see bearish divergence. So partial bookings, well, partial profit booking in pound cannot be ruled out. I mean, even if you do, I think you'll be getting a chance to re-enter at least around 25.50 mark, the lower degree wave 4. Now the next best entry in pound ideally should be coming around the 61.8% of the entire rally. And I would not be surprised, sir. Even if it drops to 38.2%, it's good for us. And let's extend that trend line because markets are absolutely sensitive about those trend lines. I've kept on saying again and again. And I would not be surprised if it tests the trend line back around the 2477. Uh, that's a 50% touch to lower degree wave 2 of 3. and then the third wave resumes. Quite possible, and I would fancy my chances that that would be more probable looking at the RSI right now. So if you look at the path, that path is laid down a bit and then higher. All right, that slight change, but that does not change the overall structure or overall trend. Partial book, partial bookings are okay, but then buying on dips is always preferred. All right, so or maybe you can push higher a bit and then lower. But there's one more dip. I think one more dip is left. All right, let's have. So that's on the long side again. Let's have a look quickly at the Dow Jones now. We would recommend partial shorts in the Dow Jones as well. We already booked in the portal. You must have got notifications as well. So I think that thrust wave. Now this is a thrust wave. It looks like a thrust wave. That was an expanded triangle wave 4 in the making. Uh, and the thrust waves. That could be the first wave actually. So let's clean out some mess here. Uh, that one is also not required. Maybe we can push the retracements to a bit lower here. So there could be a pullback rally, and that rally will be another opportunity to go short actually. Okay, we are adjusting the wave 3s and 4s and 5s. Okay, here it's wave 1, wave 2 triangle. That could be one of three, or it could be maybe 1, 2, 3, 4, and 5. That entire drop is wave 1. So various possibilities are there, but till the time prices remain below that minute wave 2, we are good to remain on the short side, sir. Because there cannot be two triangles. I mean, wave 2 also is a triangle, wave 4 also is a triangle. It's hardly possible. It doesn't really work that way. So if we look at 1, 2, 3, 4, and 5, that could be the leading diagonal, which could bring prices higher again towards the 44,000 mark. That is possible. So it rallies back to 44, confuses traders, and then sets back on its path lower. So trading point of view, you can take partial profits here. It's around 800 points almost. And once again, when it reaches 43, 44, 43, 800, 944, we can go and sell again. All right, that is the Dow Jones. SPX 500 must be on the same lines, sir. We haven't issued a short here, but it's looking better. Did you see that fifth wave drop, brothers? So let's readjust the counts here. First, the retracement goes away, and then we can also get rid of the 5 wave lower. We can straight away put the first wave here at a minute degree. That would be a minute wave 2, and then 3, 4, and 5. Just a moment as I change the degree minute. So the SPX 400, SPX 500, okay, we can take this out. We've gotten the first break, sir. I think last week we were discussing about 58.50 to be taken out. That has happened. And well, we've got the first impulse lower as well, which is a extremely good sign. You know what? These indices are telling us a beautiful story. We've got to listen to it carefully now. We cannot afford to ignore these. I mean, by any means, this drop is the first impulse. I'm pretty sure that particular drop yesterday has been a diverging in RSI as well. There you see, beautiful bullish divergence. It goes without saying that that is wave 5. So we've got wave 1, wave 2, and then wave 3 going all the way, or wave 3 completed here, and then A, B, C, wave 4. Wow, that was a running flat actually. And then the thrust wave 5, that's a beautiful structure. Believe it or not, we are heading back to 6,000, brothers, at least 6,000 and it should also be in a flash, and taking traders both sides actually. Prepare to sell around 6,000 again, as stop loss around 63, 64. We better place at 64, and the next targets are 50, 56 and even lower. I think it takes out August lows. That was what I was looking to see, if the August lows are being taken out, and I think we should be fine. Yeah, they're almost taking it out. So those will be wave 3s and wave 4s and wave 5s. You must have noticed we are spending a lot of time on indices as well. So as I was constantly saying, we are monitoring the indices, and once the story is clear, we'll be bringing it out again, and it's more than clear now. You never know, that could be wave 2 already in the making, and that could be one of 3 as well. So it's going to be very tricky from here on. Maybe the third wave has resumed. That could also be the. But you know what? Third wave resumption is not really probable, because that if that was the first wave within the third wave, it cannot be like a bullish divergence. Right. So this really helps. Wave 5 and the divergence really helps. I think we are pretty sure about the count here. We've got minute wave 1, we are looking for minute wave 2 now, and then we'll be convinced to have a minute wave 3, 4 and 5. Now with that note, it also, because we've got 2 more instruments to analyze, remember, and with that note, it brings me with more confidence that it's good that we stayed on the sidelines. Why? Because if we committed shorts, of course we would have gotten an opportunity to take profits here. Remember, we were recommending shorts around 92, 93 yesterday, and but tell you what, I think that's the first wave of the corrective as well. There's another wave left, which could drag prices or push prices all the way back towards 100K. And if that happens, that would be an even better opportunity to go short. So it's okay to stay up sidelines for a couple of more sessions. I don't mind at all. I'll be watching for a 97, 98, or possibly 90, 100K, where we'd be more than happy to go and sell around. And it could possibly be a leading diagonal in the making, with an impulse lower. Solana looks more better, but Solana has also completed wave 1 of the corrective structure. Sorry, wave A. And I think maybe wave B is also ready. We've got wave B also ready. You see the 3 up, the 3 down. A sharp rally could materialize around 229 from here. So we are not issuing a portal trade, but if you're inclined, if you're watching the session and if you're inclined to go an aggressive, you can go aggressive long with a stop just below that mark 125. That's an aggressive counter trend, with the target of around 228, sir. We would be looking to sell around 228 and not buy right now. But if you're wanting to do an aggressive trade in Solana, near term it's going to be a buy signal, ideally, and back towards 228, the 61.8% mark. Alright, so the path for Bitcoin and Solana are a bit more higher from now and then lower. We would be looking to trade towards the larger degree trends, around the 220s, about 200. We'd be more than happy to sell Solana, and 100K we'd be more than happy to sell Bitcoin as well. Alright, so with that note, we wrap up, we bring the session to a pause. And there's going to be some churning, be prepared for that. Euro on the short side, dollar index on the long side, pound on the short side, indices on the long side, gold on the short side. So there's going to be a bit of churning before things settle around. All right, but they're looking good. I think we are good in a good position to identify the wave structures here. So we'll be back again during London times, and as always, once again, thank you for tuning in. And until the next one, please do take care and God bless. Goodbye.